Hey, Wade Betz here with the Betz team over at Guardian Mortgage. Just wanted to thank you for visiting my video blog today. Today's topic is seller concessions. What are the limits? So I often get asked by my home buying clients, can the seller pay for some or all of my closing costs? And the reality is that different loan programs have different limits for what the seller can or can't do. So the easiest are FHA and USDA. Those programs cap the maximum seller contribution at 6% of the sales price. Now, very rarely do the closing costs amount to 6%, but they allow it if those closing costs are there to be paid. Now, the VA loan program is a little bit more unique. It's 4% plus closing cost. So that is a pretty broad category of what can and can't be done. But essentially, if the amounts are large enough, the veteran can actually use that to pay off their funding fee, some non-mortgage debt as well, credit cards example. It's very, very generous to the veteran. Now, the conventional loans are the next loan program, and those limits are capped depending on your down payment. So if putting 10% down or less, you're going to be limited to 3% of the sales price. From 10% to 25% down, you're at 6%, and 25 plus percent down, you're at 9%. Now, again, very rarely would the seller contributions be that high, but it is possible. We just don't see it that often. So if you think you want to make an offer on a property and you're going to use seller contributions as part of your strategy, you need to let your realtor partner know up front so they can include that in their negotiating strategy. And if you'd like to go through the numbers of what this does for you, you please let me know, because how this typically works out, let's say you're going to make an offer for $200,000. Instead, you'd say, okay, Mr. Seller, how about we offer $205,000 and you give me $5,000 seller contribution. So the seller will usually be okay with that because they net the same thing, and as long as the property appraises, that's a very good way to keep a large chunk of your own money back in your own pocket. Now, technically, the mortgage payment is just ever so slightly higher because you're borrowing a little bit more money, but usually there's a big enough trade-off to where that is good math in your favor. So again, if you'd like to walk through what this means to you, I'd be more than happy to show you an example. And just let us know how we can help, okay? We're looking to help more families. I'd love to be able to count on you to pass my name along if the opportunity presents itself. So thank you for visiting my video blog, and we will be in touch. Talk to you soon. Bye-bye.